How's it going, everyone? Natural Selections Investing here. I'm just filming a really quick, unedited, simple video that goes deep into PayPal stock. Now, this is because, recently I've been doing a lot of shorts, and I just feel like shorts, you can't get into too much detail, and there's so much I want to say. So I just thought I'd do something long form, just kind of talking about it. So we can see here, I'm in TradeView right now, and this is PayPal stock with day candles on, right? And if you know anything about PayPal, this shouldn't be new to you, but the basic story behind PayPal is, since IPO really in 2015, 2016, it's been pretty straight up. It's a tech stock, right? And it really peaked out right in the middle of that 2021 tech crypto bull run move. But with a lot of those stocks, with a lot of those technology stocks, it crashed. It went from 300 down to 74, then it bounced back to 100, and then ever since then it's just been this slow demise, and went down to 50 for a second back in October. It's kind of recovered, but we're stuck at this $50 or $58 to $60 range. Um, and there's a lot of reasons for that. Basically, among other things, some of the big things that really crashed the stock was, politically they were, called out for, I guess, holding people's accounts and kind of telling people what they were allowed to believe and stuff like that. That was a huge story for PayPal, but also just with the rising tides of just money leaving the crypto market, and uh, the end of that zero interest rate era, and during the COVID era, it just killed the stock, right? So, anyways, with that all being said, I just want to talk about my fundamental thesis for why I think this stock is just an amazing buy. Um, so, number one, as you can see here, the stock is very, very low. Now, that's a terrible thing to say for a stock without any further evidence. That's my favorite, is when people are like, "Oh, well, the stock is really cheap right now." Well, why? Right? So, really quick overview. Right now, it's saying price to earnings is 15, right? And I think that this is important. Total revenue growth. If we go annually, it's just constant, right? 2023 was a little bit less. 2022 was a little bit less, but you can see that it's usually double-digit earnings growth, double-digit to single-digit gross profit. I mean, nothing really has changed very much. Net income took a big dive back in 2022, but there's a lot of reasons for that. One of them being that they had some really unprofitable businesses that they acquired, and they got rid of them, and so that took a huge bite out of their balance sheet that year. But anyways, I just want to highlight that really quick. But to really get things started, I want to talk about earnings, right? Because I think this is so important. Like I said, the PE ratio is 15 right now. But you got to think of long term, right? So 2023, it says reported is 510, estimate is 498. So I did pretty good in 2023. If you look at the forecast for the next few years, which may I add are very conservative, there are almost no analysts that have much belief in PayPal. Look at this. For 2024, there are only, you know, their belief is maybe, what is that, 1% growth from reported to estimate for 2024. So that's probably not going to happen. But you know what? Let's just take their numbers. In the next 3 years, their estimate is 644. Well, if we do some simple math, right? What would it be? 58.27 a share divided by 644. That's a forward PE in 2027 of 9. So if you were able to buy the stock today and their forecasts were right, you would essentially be buying today at a 2027 PE of 9, right? That's just crazy. And have in mind that revenue's growing like crazy. Look at this. This is just the revenue number. What's the forecast with the revenue? Let's look at annually. revenue is going to go from 29 to 38 billion for a market cap of 60. I mean, so it's growing like crazy, yet the stock is just going nowhere but down, right? And so I guess this leads me to the next couple things. So some of the numbers that I really like is number one, as we were just talking about, forward PE is very low. Number one, PEG ratio. Right? What is PEG ratio? That's price to earnings to growth ratio. So without knowing exactly how Yahoo Finance is calculating it or what numbers are using, you basically take the PE, which the current PE is 15. So they would take 15 and then divide the growth rate over the next 5 years from that number, and then that gives you the PEG ratio. And generally speaking, anything at 1 or near 1 is very good. Above 2, 3, 4, 5, that's a terrible PEG ratio. That just means that the stock is very expensive. Now, this is a ratio that was more or less pioneered by what's his name, Peter Lynch, one of the most successful investors of the 90s. Um, so very interesting. And have in mind, these are a PEG ratio is something that you would see at 1 for something like a Walmart, like something that's consumer, it's old, it's established. For a growing tech company, a PEG ratio of 0.5 is absurd. Some other things for, again, these are for technology companies. Price of sales of only 2. Enterprise value to EBITDA. This is like a more refined version of a PE ratio, right? It's taking the enterprise value, which your enterprise value will be less if you have cash on hand, right? So this being less than the market cap is just saying that PayPal has a really good balance sheet. They do have some debt, but they have more cash than debt, right? And then on top of that, EBITDA is, I like to think of EBITDA as like, I know like Charlie Munger doesn't like EBITDA, but what I like about it is it kind of gets rid of all the crap in the earnings, right? You shouldn't be analyzing PayPal as a company if they're paying a lot for office space, right? Or their computers are depreciating, right? So why include that in the cost of good or in the expenses category before earnings is calculated? Hence EBITDA, earnings before interest, taxes, depreciation, amortization, right? So this is just a more refined version of looking at the stock's valuation. Again, 8.5. Imagine a PE of 8.5 right now, right? Profit margin is 14%. That's great, right? Some companies in the tech world have a lot higher margins, but 15% is good. I mean, essentially what that means is PayPal has a money machine where they can put in $100 and they're going to make $14 roughly off of that 100, right? With that being said, just a couple things. Like I said, cash is 14, debt's 11, not bad, right? At this point, I think this is rather interesting. Percentage of shares shorted, it's only 2%, right? So if there was genuine downside belief on the stock, institutions, man, they have no issue shorting stocks, and especially to hedge against companies that they are bullish against, right? So let's say they're bullish on Square, right? You would see a lot higher percentage of the float being shorted just so that you have that hedge against a similar company. Anyways, aside from I guess the fundamental beliefs of PayPal, let's move on to the more macro trends. So as a PayPal investor, when I talk about PayPal, one of the more common complaints, I guess, is, PayPal's old, right? Apple Pay, Google Pay, whatever, and they say that they're just losing market share every year. Well, that simply isn't the case, right? I love this graph. This is, like it says here, the most popular payment options by continent. Right, we'll start with North America. This shouldn't be a surprise, but Visa's number 1, MasterCard's number 2, PayPal's number 3. Right, so PayPal literally has a larger market share than American Express and Apple Pay, albeit by a very small margin in North America. But I mean, if we look at these stocks, American Express stock, what's its valuation? $150 billion stock at a 19 PE, right? Mastercard stock, a $400 billion company at a 39 PE, up against a company that's worth 60 billion. Now let's look at other regions of the world. Africa, Asia, the two biggest growing economies in the world. PayPal is dominating. A quarter of market share, dominating. Apple Pay isn't doing very much in either of these. And people say, oh, well, Apple Pay is growing. Listen, Apple Pay's been around for 10 years. You know, if they were going to dominate and take over, I guess, the processing world, they would have done it 5 years ago. So that bull thesis is simply not the case. South America, still 12%, right? So I just want to highlight that PayPal isn't going anywhere. Rather, they're leading the charge in the most important markets in the world. Some other things I want to talk about. So number one, Bitcoin hits record high, right? As I'm writing this, Bitcoin actually hit 69,000, which was its peak in 2021, right? Conveniently, the peak of PayPal stock as well, right? So with that being said, we're going to see some similarities here. Just as this graph going parabolic in 2021 translated to PayPal stock doing the same, as Bitcoin and the crypto cycle begins, we're going to see PayPal stock take off. Why is that? Well, number one, PayPal has released its own stablecoin, right? It's called PYUSD, right? And if you know stablecoins, it shouldn't be new to you, but basically it's just pegged money, right? So PayPal as a bank will hold your money and then give you one PYUSD for every dollar. And why would you want this? Well, it's really simple. There's so many rules. There's such a headache with transferring money, peer to peer, business to business, peer to business, business to peer, that using a stable coin gets rid of all those fees, all that yellow tape, and it makes PayPal's job so much easier, right? Transferring money from one Venmo user to the other costs basically nothing, a fraction of what it costs right now, right? Think of it this way. Why does Visa, why does MasterCard, why does PayPal charge 2% for every transaction? It's because it doesn't cost them 2%, but a portion of that amount that you process is lost in fees, it's lost in cost, and etc. Things like stablecoins are able to lower that cost, right? Imagine if PayPal was able to roll out and they said, our transaction fee is 0.3% if you use a stablecoin. Those are the sort of things that you can do, right? As you can see, it's backed. I mean, these are the key points that they want to highlight. It's backed $1 to one coin. It's easy to hold it, easy to send to friends, no fees, like I said. You can send it to Ethereum so it can translate to other cryptos very easily, right? That's another reason for stablecoins is it's a smoother and cheaper way to go from Bitcoin to as close to $1 as you can get, right? And PayPal will be a huge brand, I guess you can say, that you can buy and sell crypto, right? Coinbase, Robinhood, a lot of these companies, they have this taste in their mouth of speculation. But PayPal and arguably Cash App, they're good at taking crypto and not trying to sell you the world on it, right? Which gives it a very good position to be in. Now, with all this being said, really the last thing that I want to talk about is just PayPal's general future, right? If you're into PayPal stock, you would have probably heard about in January, PayPal had their quote first look event where Alex Chriss, their new CEO, he came out and said we're going to shock the world, right? Unfortunately, the market didn't feel like he shocked the world, and the stock went way down. But with that being said, Alex Chriss is the new CEO the old CEO that kind of caused the headache of 2021 and 22, he's out. And this new guy, he was part of Intuit. He was one of the executives at Intuit stock. And if you look at how Intuit did, I mean, this is what a beautiful, beautiful stock this has been. 2011, 58. I believe that's around when he got into the company, and it's just exploded. I mean, 1,000%, 24,000% overall. So here's a man that comes into PayPal, and this is what he's gonna do. He's gonna change things up. So number one of the biggest things that they're gonna do is they're gonna make it so that uh, the big word is AI, right? They're gonna give passkeys. They're gonna enable you to, I guess, check out in any experience. It says here as much as 50% faster, right? Twice as fast to check out, with the same level of security and trust that you can expect, right? What does that mean? So if you look here, instead of having to do all this, right, it's just really, really simple. It's called Fastlane, right? Fastlane, it's a new one-click guest checkout experience that merchant PayPal users can do, right? So it's just making PayPal, in the eyes of the merchant, in the eyes of the true customer of PayPal, make them want to use PayPal services even more, right? And most people know that PayPal kind of gives you this level of trust. If a vendor has PayPal checkout, you almost trust the company more. Some other things that they're rolling out is PayPal Smart Receipts, right? So when you get that email saying, so and so's product is coming to you now, what they're able to do is, with AI, predict what you may want next, right? And why would you want this? Well, it's because 45% of PayPal customers globally open their emails. I mean, that's crazy. I have tens of thousands of emails that I haven't opened, yet 45% of PayPal customers open theirs, right? So this gives PayPal an amazing, amazing opportunity to take over the advertising business. Okay, and here are just some other things. I mean, CashPass, it gives you, you know, new cashback offers, kind of like a Rakuten. I'm not as, crazed about that one, I guess. But really, the last thing that they talked about is kind of this idea of consolidating their big brands, right? Especially Venmo and PayPal. They really want a one product, one app experience, right? Really, the thing that I'm trying to highlight is, here's a CEO that's only been in for a few months, been part of a winner stock for the last 10 years, and he wants to change things up, right? And so, with all this being said, I become very, very bullish on PayPal. And really, to finish things off, the question is, what am I doing? So, this is what I'm doing. With PayPal, you can see here IV is at a 36%. The rank is 36%. Historical volatility is 40 or 53. What does this mean? This means that the way that options are priced, which is priced off of IV and not HV, options are cheaper than, say, they would be if vice versa, the implied volatility is higher than historical volatility. So what does this mean? This means that we can, in my case, go to January 26, 2026, and we can buy long out of the money calls for very cheap, relatively speaking, right? So to start things off, you got to make sure open interest is high. This gives you liquidity. So you can see a few that jump out. The $60 strike and the 95 right here. We're going to look at 95. This is what we're going to do. We're going to buy the 95 strike for $5.35 each, or $535 per contract, which of course gives you control over 100 shares times the delta, which I know is confusing. So basically, you get, for every dollar change in the stock, a $33 increase in this underline. But really, we should just finish things off by doing options, calculator. let's just run a hypothetical with all this being said. So 2026, it took about, let's see here, it took about uh, from July 2021 to end of 2022. Let's see where that is. End of 2022, we were down to about 67. So it took a year and a half to go from 300 to 67. And I'm not going to make this statement that it could take a year and a half to go from 67 to 300, but that speed in which the stock can change is definitely there for a year and a half. So let's take this clear resistance level of about 100, about 123, say let's go midpoint 110. Let's say that happens in, how fast did that go? Right? It went August to December. So in a few months it dropped that much. Let's see what happens if the opposite happens because of all the things that we've talked about, right? So we can go to PayPal, and this is an options calculator, just kind of allowing you to see what your potential profit would be. And we're gonna buy the January 2026 95 call for 535. And let's say that you put, let's see here, 10 grand. So I believe 20 would do that. And let's see what 50. Let's do 60 to 120. Let me calculate. And let's see here. Right now it's, yeah, in March. Let's say around the midpoint. Let's say turn of the year. Black Friday has just happened, so the stock is just going crazy. Let's see what happens. Well, we would be breaking even, worst case scenario, at $70. I mean, we were at 72 months ago, right? And that's worst case scenario. If it gets up to the 100 level, we're at 300%. Even if it takes another year and it gets up to the 110 level, we're at 200%. If that happens even faster, we're at 400%, right? So we're taking basically an asymmetrical, I guess, trade, right? In that we're only risking 10,000 for, really, in my opinion, the potential of 50,000 for 10,000, or basically 5x, right? It says here that the probability of profit is 12%. We'll see, you know. But anyways, that's about it for this video and the things that I kind of wanted to talk about. But yeah, I'm very bullish on PayPal. I'm excited to see how this video ages in the next year and a half. Maybe I'll be embarrassed I ever filmed this. Maybe you guys will be wishing I filmed it earlier and got you guys in earlier. I guess we'll see. But with that all being said, thank you so much for watching. Please hit subscribe down below. You can see that I'm brand new. You know, my story is I'm a college student studying finance. And I love stocks. I love trading. I love making money. And so if you guys could subscribe, if you guys could like, it means a lot. I'm just trying to get my name out there. And yeah, with that all being said, thank